There we go. We got 20 people here. Welcome to Wednesday Winners. This is Lake Savage-Bellavance, direct to Nelson Alvarez, direct to Aaron Gooderman, direct to Art Leeser. So tonight's topic, we're going over a couple of different things. First is a couple of announcements. If you don't have insurance toolkits, you're definitely missing out on writing more business. What Insurance Toolkits does is it takes the fear of underwriting right away from you. It's $35 a month, I believe, or $39 a month. But look what it does. So traditionally, you're going to be posting, and you should still be posting all of your case designs to your upline chat. But look at this nifty tool. So it's called Insurance Toolkits. For those of you who do not know what it is, this is generated by Integrity Marketing. This is a term quote tool. So I can plug in all the client's health information. Let's say they've got arthritis. That right in there, osteoarthritis. It'll ask for the date of last treatment. If I put in a medication, meloxicam, boom, anti-inflammatory, osteoarthritis. When did they start taking it? Boom. Now they're a male. They're born in 1975, right? A little bit young to have osteoporosis, but it is what it is. And then you hit get quote for the term length that you want, and it spits out every single quote, all the carriers that we have available to us, and all the carriers that are available in that state. So if you get all of your information correct, it's not 100% correct. I would say it's about 90%, 95% correct. So you still want to double check with your upline, but it's going to add everything that you need in order to get solid approvals. It's one thing to write business, but it's another thing to get it approved. And the more information you have from your client, the more you can plug into toolkits and the more accurate it's going to be. Not only does this for term, but you can click this nifty little button that says return of premium. Now I hit get quote again. It's going to list all the return of premiums available for that client. Okay, so that's huge. So that's extra value. Now we can go to final expense, is what you're going to be using every time for mortgage payment protection, which is our topic later tonight. Had a client today with diabetes, current schizophrenia, takes a couple of different medications. I had no idea, actually, as long as I've been doing this, I had no idea that CVS would take this preferred. I had no idea. Americo takes it at preferred. Look at these other carriers taking it at standard, and then you have Great Western. So even with schizophrenia or bipolar, you can still get a preferred rating. If I didn't have toolkits, I would have known that, right? Because I would have gone on my underwriting that I did manually. I'd go look at underwriting guides to see who the best carrier is, what the best option is here in Maine. So if you don't have it, talk to your upline about getting it. It's an amazing tool. So the other thing we want to talk about is we have a boot camp coming up. We have a boot camp coming up October 25th in Raleigh, North Carolina. That boot camp is a training summit for the GT agency. You got to be there. The reason is you're going to skill up. You're going to rub shoulder to shoulder with the top producers in GT. You're going to be able to ask them questions. Just like Aaron said, don't let us eat our lunch, right? Come up to us and ask us questions. Those who are asking questions are succeeding the most. It's so simple in this business if you don't let your ego get in the way. Don't be embarrassed of asking questions. None of us have ever yelled at you for calling us too late, or none of us have ever yelled at you for calling us 20 times a day. Heck, I still call Nelson like 15 times a day. I still call Aaron 5 to 10 times a day, right? Mark is in the same boat. He just has to turn around usually now because he shares an office with Aaron. But it's so important to get that constant feedback and that constant level up. So by coming to boot camp, you want to increase your sales, go there. You're going to learn something new. You're going to learn ways that you never even thought about doing business that you haven't heard on national calls. It's going to be there. So October 25th, you can go to tlg-gt.com and sign up for fall boot camp. All right. So couple of different topics tonight: selling with posture and mortgage payment protection. So mortgage payment protection, if you're using TLG 2s, 3s, 4s, and 75s, or you're doing direct mail, Those are mortgage protection liens, okay? Not all of them are healthy enough. If you've been around, not every single one of them are healthy enough to qualify for a term product. Well, what happens if someone has a $300,000 mortgage and they don't qualify for term? Well, I can only show them $40,000 final expense. Well, you got to come at it with a concept sale. That's mortgage payment protection. Okay, I've been through this a couple of different times with you guys, but it's important to bring us back to the basics. What mortgage payment protection is taking their monthly mortgage payment and multiplying it by the amount of time they think they need to be able to sell the house comfortably, to get the equity in the home. They may owe $300,000 on the house, but what if it's worth $600,000, right? How much do you think your clients can afford to lose on that? The other big thing is, you know, usually older folks, they're living in a home together. Sometimes they're living on a farm and the husband is doing all the work. Well, if the husband passes away, do you think the wife's going to want to do all the work around the farm by herself? No. Not only that, she's not going to have enough income to pay for the home. So if they lose it to foreclosure, guess what? They lose all that equity too, in most cases. Okay. So we want to buy them time. That's the concept. So if they have $1,000 monthly mortgage payment and they want 12 months of protection, that's 12,000 face amount. Is that tracking with everybody? If they want 18 months of protection, you're going to want to give them 18,000. Okay. This is going to drastically decrease the premium if they're old and healthy, and it's going to make it available to more options for unhealthy people. So we're just buying them time. A lot of times, if they're under 70 years old, I'm also going to add an accidental policy. If you have your health license, you can do Mutual of Omaha's Guaranteed Advantage. That's 20% of my business right across the board anyways. I always add accidental. Mark is amazing at adding accidental. I bet his is like 30% at this point. Not to mention, if you don't have your health license, you can use Americo ADB. Now, I want all of you to think about your current contract with TLG, okay? Get that number into your mind. Add 30% of that to that number. That's what you get paid on Americo's ADB. You get paid 30% more than your contract level, that accidental. So if they're under age 60, use that. The other cool thing about Americo ADB is that if you're under 60, it lasts 30 years or until age 80. Okay. I believe it's actually age 50 and below, it's 30-year term. Age 50 and above to 60 is a 20-year term. So age 50 and under, you get 30-year term. Age 50 to 60, you get a 20-year term. So that's much longer than what Mutual of Omaha has been able to offer. Okay, what that's going to do is it's going to supplement the coverage, give the clients a visual representation of a bigger number, because that's really what everybody's seeing. They want a lot of insurance. It's going to supplement it with the amount of time you're able to give them. So if they die by accident, boom, the house is covered. It's paid for. They don't have to worry about it. They die of a natural cause, at least they get 6 to 12 months of mortgage payments. So how do you convey this concept to the clients, right? That's the hardest part, is getting that confidence to the client. So you have to be uber confident and posture really well that this is a good option for them. A lot of you will start and say, well, why would someone want to pay $180 for $12,000 in coverage? I wouldn't do that. Well, guess what? You just destroyed that sale. You destroyed every opportunity to protect those clients. Because I know people have literally lost their home because their husband passed away. They weren't able to pay for it. Don't you think if someone had 12 months to be able to figure out what's going to happen financially, what are they going to do with the house? It gives them a lot more time than 90 days. Technically, the bank can start the foreclosure process after one missed payment. If you've been in foreclosure before and you've gone out of it, there's no reason why they can't start foreclosure again after one single payment being missed. Okay, but typically people are going to see around 90 days before the foreclosure is done. Okay, so if they foreclose on the house, your client calls you and say, what did we do? I thought we got life insurance. You said you didn't want it. How bad would you feel? Feel pretty bad, right? This is what we need to convey to them. So how we do it is you're gonna start your appointment as usual, as normal. You're gonna build a little bit of rapport, and then you're gonna start talking about the house. Hey, did you refinance the house? Is this a refinance or is this a new mortgage? Right? Start asking questions about the house. Oh, that's awesome. What was it worth when you bought it? How much is it worth now? Have you had it appraised recently? See, I'm building that big number in their equity by asking those questions, right? I'm starting off asking direct questions to them. So you're gonna continue to talk to them about the equity. Ask them what they would do if either of them passed away, right? Ma'am, you wouldn't want to live in this big house alone, right? You'd probably close up shop and move in with family members or your own apartment, right? Yeah, I couldn't take care of this house myself. Exactly. So why would we take care of the entire mortgage? Right? I'm planting those seeds in there. Okay. The husbands can be a little bit trickier because they usually say, well, I can pitch a tent out back and survive. Right. There's a lot of pride there with husbands, but you really have to make the point, well, yeah, you can pitch a tent out back to make it work, but wouldn't you rather have, $150,000 in equity in the bank? You're really going to let $150,000 go? Right? So this is how I explain it to folks. We protect our clients in 3 different ways. The first is bodily injury. That's going to cover any slips, trips, falls, car crashes. John, you're on blood thinners, so if you slipped and fell and you cut your head open, you have a risk of bleeding out, right? That's a very real.
Time you see an ad on a
guys,
video, that
need you to mute out. Thank you. Where was I? Oh, slips, trips, falls, any sort of car crashes, trying to fix something on the roof and falling off. It's going to cover that. It's a lot of coverage for very affordable amount. Okay. The second way we protect our clients is what's called mortgage payment protection. This is where I'm going to explain the client how it works. I'm going to tell a story. Because remember this, facts tell, stories sell. So I'm going to tell them a story to relate to them. So the second way we can help our clients is mortgage payment protection. That's going to give you guys enough time to figure out what's going to happen next when either of you pass away. For instance, I had a friend of mine whose father had throat cancer. And unfortunately, he passed away in about 9 months. Cancer is very real to people. Everybody's lost someone to cancer. Everybody's seen a GoFundMe, right? So this is why I use this story. He did a good thing, though. He left his home behind to his 2 sons. He owed about $150,000 on the home. He's been paying on it for years. His sons are 21 and 25. They're just starting their careers. His mortgage payment was actually $2,200 because because he owed $150 doesn't mean that's what he started with. He started with a $400,000 mortgage. They couldn't come up with the money. They came up with 1 month's worth of the payment, and then 90 days later, they foreclosed on it. Does the bank care if either of them, if their father passed away? I throw the bank under the bus all the time. I'm not going to lie. I always do because they don't. They do not care. They only want the loan to be paid for no matter what. So by asking them, hey, does the bank care if either of you pass away? No, they don't. They're going to want their money. So after 90 days, they came in and foreclosed on father's home. And then they short saled it. The short sale is they sold the property for just the amount it was owed. You'll see a lot of real estate gurus out there looking for foreclosures for that reason, right? Because they can get them dirt cheap and off market. They'll find them at an auction, right? So they short saled it for $160,000. They left them behind with $10,000. Want to know what the house is worth? $400,000. They missed out on $250,000 in equity because they didn't have enough time to sell the house. Now, you may be able to sell the house tomorrow if you're in a good area or if the house is in good condition, right? But what happens 10, 15 years from now? Can you tell me what the market's going to do? No. So don't you think those boys would have $250,000 to split if they had a year's worth of payments? Clients are always going to say yes. Now, here's the next part. I'm going to tell them about something they can't get, or I'm going to throw a wet blanket on it, and that's term. So I've said, first way is accidental bodily injury. Second way is mortgage payment protection. The third way is term insurance. Now, you and I both know that when you get into your 50s, 60s, and 70s, what happens to the premiums on term insurance? It gets ridiculously high, right? And it's the hardest one and most expensive. So I'm taking term right out of their heads, right? Oh yeah, I don't want that. That's what they're thinking, right? I don't want term. Plus, why would we get you a term policy if you live another 10 years? That's all you could probably get at 70 is a 10-year term. How does that help you if you live to 81? You're still going to owe money on the house. You got a 30-year mortgage. Which one do you think you're going to outlive the mortgage? You know, they're going to laugh at that because they're 67 or they're 60. That's going to put them at 90. If they're 70 or older, that's going to put them over 100, right? So why would we pay off the entire mortgage if it's going to be too expensive? Okay, so I'm going to show you first two. Show you bodily injury, and I'm going to show you mortgage payment protection. So then I'm going to go right to my slides, and I'm going to start talking about TLG. I'm going to go right through the normal process. So you're going to go through who we are. I'm going to put a little bit about me there to kind of familiarize myself with the clients, get on their level. And then I'm going to jump over, after this, I'm going to jump right over to back to the screen, and I'm going to talk to them seriously. Now, Mary, now that we've kind of talked about mortgage payment protection, if John passes away, let's say he passed away 30 days ago, what does this last 30 days look like? So I'm not making her in the moment where he just passed away, because you're really not thinking about the financial impact at that moment. I'm giving her time. He's been dead 30 days. What does that look like for you financially? What is your next move? 9 times out of 10, they're going to say, I have to sell the house. Right? How much time would you think you would need in order to do that? Probably about a year. Right? And I'm going to flip it to John. Well, I make most of the money. That's usually the case with older folks. With older folks, the man is usually making more money. It's kind of equaling out these days. But for right now, it's usually the man. He's got a higher pension, or he was in the military. Yeah, that's all well and good. And you could probably afford the house on your own, but would you want to? Would you want to spend all that extra money? Because you lost her income and now you're taking on the brunt. Is that something you really want to do? No, I probably would sell. Exactly. How much time do you think you need? Probably 6 months. Okay, great. So now I've got them thinking about the time frame. So I'm going to show them exactly that. So remember when I was talking to you guys about accidental? Okay, so here's what it looks like. And I'll bring up the accidental slide right here. So this is for a couple. Usually if they're older, it's a little bit cheaper. Let's call this 76 bucks, 54 bucks, 30 bucks, okay? On Mutual of Omaha's policy, you can add 2 people on one policy for their accidental, okay? Usually I'm gonna add both of them from the Americo ADB. I'm gonna add them both together to get a number. It's just easier to show them that way because they're gonna be the same number. So check this out. You have a $250,000 mortgage. This amount covers both of you. Just for that single premium, it covers both of you. 200,000 covers almost that amount, but it gives you a fighting shot. And 150,000 is going to cover about, just over a third of what you owe, just over a half, really. So at least you have some options here. Can't you see how affordable it is? See, I'm putting what I want them to think out there, because this is affordable. $250,000 a piece. And if they ask questions, if they both die in a crash, your family gets 500,000. They don't just get 250,000 if you both pass away, they get 500,000. That would go to your kids, your grandkids, however you want that to go. But any of those slips, trips, falls, car crashes, unprepared lightning strike, is going to cover. Okay. Out of these three options, which one feels right, but most importantly, which one fits your budget? I'm making them choose one right now. And then I'm going to say, okay, I'm going to make a note of that. Okay. Mark, I want you to speak on this, bro, if you have a minute, because you sell as much accidental as I do, if not more. How do you pitch the accidental, the mortgage payment protection?
So, for anybody that is within the age bracket, I'm always including it on every single, every single presentation that I do, without fail. And I always do that first. I explain to them that it's a supplement. It's not their main policy. It's meant to supplement them. I also tell them that, listen, you fall within the age bracket where 65% of people in the United States pass away from accidents versus natural causes. And so it makes more sense to put more into the accidental than it would be for the natural causes. If you were going to pass away in the next handful of 15 years from now, it's most likely going to be an accident. But if you're going to pass away of natural causes 15 years later, well, now this mortgage payment protection will take over because the mortgage is going to be paid down by a lot more. But at least we can get you into that dollar figure you were looking for should you pass away of an accident. And it just makes sense to them. It resonates with them. Like you said, I write, like last month I did 34,000 and 3,000 of it was in just in accidental only,
Yeah. You did 1,000 today in accidental alone.
I did.
Yeah.
Yep.
Yeah.
So it's every policy that I wrote today was attached, but I don't, like, for instance, you said you put it in a group one, with the husband and wife together. I do it separately, and I do it separately so they each have their ownership of their own policy. And that way, because if one passes, then that uses up the policy, right? Now,
not for Mutual of Omaha.
Okay, it doesn't?
No, it's last to die.
Okay, so I just do it as individual, and then I explain to them that say he passes, you'll get the money for this, then you can give me a call and we'll change the beneficiary on yours to one of your children. But at least you'll still have your own ownership. It's kind of how I present it. Gives me a little bit more money, but yeah. Nobody's ever questioned that. So yeah. I always, if they don't know, they don't know, right? So I just present it as they own their own policy.
Right.
So that's kind of how I present it to them is, it's a supplement. It's meant to add. You can choose whatever you want. I'm going to show you the maximum. That's 500,000. It doesn't mean you have to choose that, but I just want to show you what you qualify for. What I really see you guys at is your mortgage is $100,000. I say $100,000 makes sense. And I kind of steer them in the direction. I'm advising them into the direction that I think would make more sense, especially because I've already done a financial review and I kind of know where they're at as far as money goes. So I'll talk them into the lower one because something is better than nothing, right? And we're still covering the mortgage if it's 100,000.
Right. And here's the cool thing about this as well is if you have clients on a very tight budget, they can afford an accidental every single time. So on a place that you normally wouldn't get a sale, you got one because you got an accidental. And Mark wrote 1,000 AP in accidental today. And if you're let's say you're at a 70% contract, he wrote it with Americo ADB. You get paid 100% commission on 1,000 annual. So you just made $1,000. I'm not going to shake a stick at that. I can only get accidental. No way. I'll make $1,000 every single time. Right. So yes, thank you for that, Mark. It's extremely important to add this in there because they're going to see that we're actually taking care of them and we're coming at it with a two-prong approach. So after I show them this and they've picked an accidental policy, I'm going to say, okay, now would you buy a brand new Cadillac or a brand new vehicle and drive it off the lot with just liability insurance? They're going to say, hell no, right? You're going to want full coverage. You want to protect your investment, right? So if this doesn't work, now we need to protect you for natural causes. That's where the mortgage payment protection comes in. So let me see if I can find a mortgage payment protection one. Let's see. I have one somewhere. There we go. So Adam, so this is policy, I did 12 mortgage payments, 18 mortgage payments, and 24 mortgage payments. This was with Americo, which automatically doubles the original face amount. So not only do they get that full-on accidental, their regular whole life insurance will also double. So that's even more money they can leave behind to their family. So I'll explain to them. So guys, this is a whole life coverage. So that means no matter when you pass away, you're still going to leave behind 24, 18, or 12 months of mortgage payments. Remember that term, how it only lasts 10 years? This doesn't matter if it's 20 years. It doesn't matter if it's 17 years. It doesn't matter if it's 29 years. You still give this amount to your family when you pass, to your spouse. Okay. And remember what we talked about? You said, John, you wanted about 6 months, and Mary, you wanted about 12 months. Well, here's the figures. Here's what it looks like. Okay. And then I'm going to ask the same question again. Out of these three options, which one feels right to you guys? And they're just going to pick one. They're going to pick one. They may have some questions about how it works, but usually that's going to do a great job at explaining the concept sale to them so that they can at least get something, right? And if I have to backtrack, if they say they can't afford it, I'll bring it right back to the accidental. Well, something's better than nothing, right? So let's get the accidental started. What's your middle initial? I'm not going to skip a beat. That is selling with posture, which is the next part of this training, okay? I'm going to go a little bit into it now. We can probably go into depth later, but selling with posture is being bold, being honest, and being forthright. So by me saying, okay, I'm helping them make a decision. Oh, let's go the accidental. You pick this one. What's your middle initial? And I'm just going to start bringing up the application. They're just going to go along with you on that, okay? You don't want them to sit there and hum and haw about it and think about it too much, right? And guys, trust me when I know this, you might be worried about cancellations or anything like that. I have, out of all of my business this year, I probably have a 95% persistency rate. Industry standard is 20%. TLG's average is 8%. That means that out of all the policies that we write as Lisa Group as a whole, only 8% cancel. That's because of our training. The industry as a whole is 20%. That you should expect 20% of your applications to cancel and 80% of them to stay on the books. But here at the Lisa Group, you can expect only 8%. That's less than half. So just be bold with them. The other thing is when you're selling with posture, what I mean by that is you're selling from strength and you're not going to fall into their selling system. You're going to stay in your selling system. So in the beginning, if someone's starting to give me crap, I just want to know how much this is going to cost, right? What do you guys do? I know as a new agent, I kind of just, well, how about this? I stammered, right? Because it's hard. You get caught off guard with it, right? You just got to go with the flow and say, hey, absolutely. But what I want to do is make sure I explain this properly for you because not all insurance is the same. I'm putting them back in their place politely and saying, hey, this is my system. We're on my Zoom. We're going to go along with my system. Okay. So if you see a guy crossing his arms, not really paying attention, sometimes you can tell when you're on a Zoom, someone's watching a TV, right? They're looking off into space. They're watching TV. Call them out on it. Hey, what's on the news, right? That's being bold, right? Hey, what you looking at? Anything funny, right? You just kind of bring something up, but you want their attention to be back on the screen. I'm commanding their attention. Hey, I know the game's right on, but we need about 15 minutes of your attention so that we can make sure we protect your wife. That's selling with strength, okay? If he's crossing his arms and he's not involved in the conversation, you need to get him involved in the conversation. Ask him how he's doing today, right? Get him to pay attention. What do you think about this? Oh, she just wanted me to do this, and no, I don't really want to be here. And that's what I'm going to say. Well, it's important for you to protect your wife, right? You told me that you guys were together for 30 years. You want to keep protecting her even after you're gone, right? That'll get him to soften up a little. Okay. As far as posture, I want you guys to really, if you get objections in the beginning and you can't handle them, I want you to move on. Okay. If you're brand new, I want you to call your upline right then and there during the appointment. The beginning of every appointment, you should be asking, hey, if we can find the sweet spot for you guys, is there any reason that would hold you back? If they say yes, we want to shop around, and you can't handle that objection, you need to call your upline to help you with that. There's no shame in that. I'd rather be kicked off a Zoom with my clients and not get the sale than go through an hour's worth of work and still not get the sale. You hear what I'm saying? So if you're finding that you're not going to get anywhere with these clients, fire your clients and hang up. 20 minutes. You should give yourself a max 15 or 20 minutes. If they're being way too difficult and you've already gotten your upline on the line, then get rid of them. You're better off and serve your time to dial the rest of that time where the appointment would be and book 2 more appointments in its place. Don't be afraid to do that. Okay. If you're not getting anywhere, I had clients this morning on the telephone. First question. Yeah, we just want to know how much it's going to cost. I said exactly what I told you guys. Hey, absolutely. We're going to get to that part. I want to make sure you guys understand exactly what you qualify for. Is Mary there? No, she's in the other room. Well, can you get Mary for me so that we can talk about this? Because it is important. So I made them sit down together and talk about it. She started giving me crap. I really don't think we can afford this. And I said, what makes you think that? She says, well, we're both on fixed income and we just don't feel like we want it. I started asking probing questions. Do you guys have something else in place that would help take care of the mortgage? No, we'll just figure it out when we figure it out. And I said, Mary, is it a bad day? Are you having a bad day? She said, no, I'm having a fine day. I just don't feel like we need this at all. So I tried 3 or 4 more times and I looked at the clock. It was 15 minutes in. Okay, Mary, well, it sounds like we can't do anything for you guys, but if you have any questions, feel free to reach out. Wasn't going to waste my time. They couldn't, I'm not going to try to rebuild a why for someone and keep going and going and trying to build that emotion if they're just not soaking it in. And you'll recognize that with time. You know, you guys are definitely new. You're going to go through appointments and say, I wish I didn't go through this whole appointment because I feel like I wasted my time. You didn't. You're learning. But as you get into the game, you're definitely going to start noticing people's attitudes and what you're willing and what you're not able to do. Mark, you have something to say?
Yeah, so I actually go into, and this is something that you actually taught me a while ago, and Nelson. So I'm just going to reiterate kind of what you taught me, which was, you know, on a scale of 1 to 10, you know, if you see their arms folded or they're not, or how much is it? Hey, listen, on a scale of 1 to 10, what's your seriousness about putting protection in place for your family? You know, and oh, we're at about a 5. Okay, well, hey, listen, there are many online tools that you can use to get quotes. I'm not a quoting tool. I'm an insurance advisor. My job is to work with you to put something in place that makes sense. If you want somebody that's going to go to work for you, fight for you, and get you approved in a product I know I can, then I'm your guy. If you're just looking for quotes, I don't think we should sit here for another half an hour and talk about what your options are if you're not ready to commit. What do you guys think?
Yep, you're putting it back in their lap. That is posture, that is strength. That's what you need to do because you're the insurance professional. They have no idea what they want. And, you know, I would say probably half the time they'll want to sit with you. The other half of the time they said, I will just look online. Okay. Guys, there's no skin off my bones if they want to do that because I knew I did everything I possibly could to make sure that I got their family some protection. Okay. So don't be afraid for that because if you're going to get a no anyways, what's the big deal? Right? As long as you keep, I don't want you fighting with clients. I don't want you to think that being bold and with strength is fighting with clients. If they start coming at you and saying, well, I don't like this, this is ridiculous. Or if they come at you and say, well, we told you already, we don't want this. You're probably pushing too hard and not thinking with emotion. So how you're going to handle a situation like this is you're going to do exactly one of the phrases that Mark's used is very emotional. Hey, would you rather have someone explain the products to you? Like on a scale of 1 to 10, how important is it for you to protect your family? Not how important is it to you, right? Hey, Diane, how important is this to you? right? It sounds kind of combative, right? But if I say, how important is this to you to protect your wife, right? That's personal. That gets them thinking a little bit more emotionally. So if you can formulate your questions to bring out the emotion, don't push back, just bring out the emotion. If you see it's not there, see ya. I'm just going to make 2 more appointments in its place. Much, much better use of my time. So it is 8:40. That's the end of this training, but I am going to open it up for some questions. So go ahead and fire them out. You got a little reaction button. You look at the bottom of your screen, put your mouse over the bottom of the screen, you'll see a reactions button. You click on that, you can raise your hand. There was a hand raised a while ago, so I'm going to call on this guy first. Jason Wells.
Hey, Lake, good info.
Hey.
I got 2 questions. The first one was that particular example that you pulled up of the $250,000, and they were both on the same policy at $76 a month. Both of them are paying 76, or that's just one payment of 76?
One premium.
Okay.
One premium.
All right. And the follow-up to that, the second question was, you mentioned that this is what Mutual Omaha offers. How are you?
Can't hear you, buddy. Hang on. Still can't hear you. I don't know what happened to your mic. No, mic's dead. Did your mic just die? All right. Hey, Jason, can you try one more time? All right, while you're doing that, I'm gonna move on to Diane.
All right. My question is, when you were talking about when you're on with the client and you're having a problem with them and you saying to call the upline, am I supposed to tell them to hold on a minute and then call Nelson?
Absolutely. That's all.
well-
Don't be embarrassed about that. Just say, hold on.
No, I don't feel embarrassed, but I'm feeling rude. But
It's not rude. You're just gonna
Okay.
just say, hey, I got a call coming in. Call up. Right?
okay.
Or you can text Nelson in your upline chat. Hey, 911. I need
I've
some help.
texted
Can you call
before.
me?
But I just don't, and then it's like, and then I can ask him what my problem is and he can help me right then, right?
Right. So what you're gonna do is say, hey, Nelson, I'm having an issue. Can you please give me a call? 911. I'm on with clients. He's gonna
Okay.
call you, and then you're gonna say, oh, hey, I got someone I want you to meet. Hey, Mr. Alvarez, how you doing? I'm here with Mary and Joe. They're liking their options, but they just really want to take some time to think about it, right? Okay, hey. Oh, really? Okay. I'm gonna put him on speaker. Hey guys, how you doing? You're gonna let him work his magic.
Okay, because I like his magic. Yeah, he's good.
Yeah, he's
Okay.
real good. He's real
Okay.
good. We've got an excellent upline. So
Yes.
if you can use that at any chance, just get them on the phone. Let them talk
Okay.
about it. When we were out in the field going home to home, you guys have no idea how easy this is now doing it virtual. But we would literally have to travel to people's homes, hours away. And when we had an issue, I wasn't leaving the home until I called my upline. Right? Sometimes I got kicked out of the home, but you know what? At least I knew that if my upline couldn't sell them, guess what? Chances of me selling them, pretty
Yeah.
slim,
Yeah,
right?
makes sense.
So that I know
Okay.
I did the best job I possibly could.
Okay, thank you.
You got it. JP,
What's up, guys? You can't really see me here. I'm kind of, okay, here we go. Hey, Mark Spear, on a scale of 1 to 10, how likely is it that you would transcribe that or find a way for me to get that awesome rebuttal? That was
No
gold.
problem. No problem. I'll take care of it.
Thanks, dude. Awesome.
yeah. Awesome. Kobe.
That's all I had, man.
Yeah.
All right, I just want to have a follow-up because I actually haven't sold ADB with American yet. I've always gone Mutual Omaha because they've been great, but I want to start diversifying. So just to make sure I understood correctly, if you're under the age of 50, it's a 30-year term. But between the ages of 50 and 60, no matter where you are, it's a 20-year term. Do I understand that
Correct.
correctly?
That is exactly correct. That is for their, it's called ADB. That is the product name. You got to go to Sales Connection to quote it. They don't have it anywhere else.
So I might be saying, I thought it was good to 80.
So-
If they're older, if they're over 50, it's good to 80. Is that not true?
No, so it's, if they're over 50, is it good to 80? Because you can't sell a 30-year term to anybody over 50 to 60. And then Mutual of Omaha's accidental ADB, you can't sell them after age 60. Most accidentals go to age 70.
Mutual of Omaha is after 70, ADB is
Correct.
after 60. But if you sell a Mutual Omaha at 70, it shuts off at 80.
Correct.
Right, so is ADB the same way? Does it shut off at 80, or let's
No,
say
it would be a
they're
20-year term.
be a 20-year term? Okay.
It's just 20 years flat.
20-year flat.
Okay. All right. Thank you, man.
You got it. Jason, are you back, brother? No, we still can't hear you. Sorry, man. You can call us later. Chris, what's up, my man?
Hey guys. In regards to when you question them, how many
Hang on,
months
Chris.
out?
You're a little bit low, bro. Can't quite hear you. It's muffled.
Is that any better?
That's perfect.
Okay, great. So when you question the clients about how many months out do they think they would need a mortgage protection, and they say 6 months, how often or do you try to push them for, give them more cushion, ask them to go to 12, or do you kind of just go with what they're suggesting? Or
Go with what they're suggesting. That's your easiest route. This is not car sales. So like I would try to upsell you to a crew cab instead of a super cab. Right.
Okay.
I know it's a few thousand more, right? And you can negotiate on that. With insurance, if they're uncomfortable, they're just going to cancel.
Okay.
So you want them to have something that fits their budget, right? And here's the cool thing. At the end of my presentations, I could say, guys, so if you need to make any changes, call me. If you want to go up or down in coverage, then we can do that. And if you're following up with your clients, after a year, they're like, hey, Lake, we settled into our new place. We actually think we can afford more. Can we get more coverage? Boom. That's just building a relationship. So just make sure you go with what they ask for. Don't try to upsell. That'll get your business canceled pretty quick. Great question though, because when I came in from the car business, I was I was trying to upsell everybody. Let's not go there. Diane, is that you again?
It is. How do I get that toolkit?
So if you go on to Workplace, not the chat, but Workplace, you can type in insurance toolkits and a link for Kimberly Noretta will pop up and you'll get the discount that TLG gets for insurance toolkits.
Okay, thank you.
A couple of other things. If you go on Workplace, again, this is a learning management system. If you type in MPP, you'll find a call that Josh Harris did, and you'll find another training that I did on mortgage payment protection. Okay, go back and watch those. Pick up things. Talk to your upline about, hey, should I add this in here? Right? I really like how this person does this. Can I add it in here? And then they'll coach you on what to do. There's nothing wrong with, there's thousands of videos in Workplace for you to learn from. So I encourage you to do that. But it is 8:48 p.m. We're going to call it quits for tonight. I'll see you guys next Wednesday at 8 p.m. Thanks for coming.
Looks like